Welcome to TheoTrade. This is Don Kaufman. February 9th, 2022. You've got 10 minutes left inside of the trading session. S&P's up a staggering 63 points. Once again, an absolutely ripping rally. Nevertheless, there is no volume, no size to this rally. It's one thing I wanted to point out over the last couple of days. Option contract size is falling about 36 million contracts a day. S&P's here. Look at this. They're doing like 1.1 million for those of you that do not speak volume geek. And again, you can take a look at this specifically on a daily chart, which I'm going to bring up over here. And during the midst of this this kind of ripping rally back, we've actually seen volume starting to fall. There's not a huge amount of commitment to trade. That though, it doesn't necessarily mean like, oh, nobody wants to buy anything here. That's not what I'm getting at. Okay, with the commitment to trade, it has, in my mind, a lot to do with the fact that, well, there's a CPI report coming out tomorrow. For those of you that have absolutely no idea what CPI is, well, it's consumer inflation. Inflation! It's the hottest topic going. You know, this CPI number, it is, to me, unequivocally, it's the biggest number coming out in all of February. Okay, that's it. I mean, it's bigger than the jobs number. It's bigger than any other, data drop that you're going to see at this point. So, you cannot take this CPI report with a grain of salt because this thing has the propensity to be able to rock markets. And I'm actually going to show you what I believe that setup happens to effectively be. Again, the crux of this evening's video here is, will tomorrow's CPI spark volatility and really the kind of a volatility rebound? And the answer to that is you better believe it. In fact, you can even see coming into today's close, like there is some chopped out fast trade, even though the vast amount of today's trading session, I mean, we're up like 57 handles in the S&Ps, and we did absolutely nothing. But the conversation piece here, as I say, there's some fast and chopped out trade. Does this look like, a lack of volatility? No, it's absolutely indicative of volatility. And what I'm actually pointing out in this context here, this is a move from like roughly 79. Okay, the lower edge of this candle is down to about 72. I mean, how often are you getting 6, 7, maybe even an 8-point move in the S&P futures inside of 1 minute? All right, and it's happening again and again over there. So volatility, it is still very much with us. And you got to look at this as, for what it is. At this point in time, we've had a fairly precipitous sell-off, decent sized rally back. Nevertheless, inside of the QQQ, the QQQ has not necessarily rallied back nearly as much. Let's, for the time being, though, push all of that aside. Let me actually give you the setup for tomorrow and then what I would anticipate thereafter. Probably the primary aspect that I want to focus on, first and foremost, bond market. Okay, why do I want to focus on the bonds? They are sitting here poised right to the lowest edge of where they have been in really any recent history. I mean, you got to open up a fairly substantial chart, even a 3-year chart, to actually see bonds that have traded considerably lower than they presently are. Now, to be fair with that, and for those of you, again, that are a little bit of a charting geeks, you have to adjust for contract changes, hit apply, hit OK. There's no question, though, the bonds, they could be poised to actually break down to 150 on this CPI. Now, if they do, okay, and this is one of, if you will, like the triggers for the marketplace, if the bonds actually break or if the notes break, the TNX, this is actually the 10-year interest rate, it's going to hit 2%. I mean, people, we've stalled out over the last couple of days after an absolutely blistering move, off the jobs number. And that was the jobs number that we actually saw the spike up on interest rates. But after that blistering move, things kind of mellowed out a little bit. We are poised right now for a clean shot right to the big 2% on the 10-year. And that's where tech could start to just absolutely freak out again. So that's why I'm saying, like, listen, this could cause a very significant rebound in volatility. But there's a lot more to this particular picture. I'm going to cruise over to the SPX because I want to give you a feel of where we are on the week. Now, whenever I tune into the SPX, this has a lot to do with what we term expected move. And again, not everybody necessarily speaks geek. So let me give you just the kind of real quick lowdown on expected move. The expected move, the line in the middle of the screen that I'm highlighting presently, that's where the week effectively started. Or, okay, in better terminology, when I say the week effectively started over here, I think the best way to kind of present that to you is ultimately that is where last week ended. So, Friday close, well, that's where that central line is effectively drawn. Now, zooming back into it, the upper, and lower edge of the expected move. Where do these levels effectively come from? They come from the Friday close, right? It's like an average of all the option prices in the chain. But what you're actually looking at in this particular case is it's about plus $107 or minus 107. That's not a number that we derive. That's a number specifically, again, it's like an average inside of the SPX options specifically for 1 week. What is so critical and what's actually going to define a huge amount, of trade tomorrow is we are a hop, skip, and a jump off, if you would, the upper edge of this expected move. So we're actually going to put a specific level to that. Now, this is SPX. I'm speaking SPX term over here. It is 4608. All right. Why do I point that out? All right. Regardless of what the CPI number happens to be, whether it's good, whether it's bad. And by the way, to try to define that, it's going to come in at 7. It's going to come in at 7.5. It's going to come in at 8. Even if I had the CPI number in my hand right now, there'd be no way I could dictate how order flow is going to play out. Nevertheless, I will give you one aspect, and that's this. Even if all of a sudden the marketplace bursts to the upside, incredibly high probability of a pullback right here, 4608. Or when that CPI number comes out, we actually spike right to the 4608. What I am indicating in this particular construct, is that level, again, that 4608, is going to be extremely prohibitive. Even if, again, we do crest above it, there is a incredibly high probability throughout the course of tomorrow's trading session that we're going to pull back specifically to the 4608. So why am I bringing this to your attention? Because there's relatively limited upside capacity to the marketplace. What's the downside? Well, the downside could once again turn into the abyss, as I just showed you. I already set you up for this, What if the bonds break? What if the bonds break? And there's something I was saying on this past weekend's update, and that's if the bonds go, we all go. And that, what that really means, to put that a little more context around that, if the bonds really start to break down because of that CPI number, if the CPI comes in hot, when I say hot, CPI comes in like, 8%, inflation is raging, that the Fed has to actually step up their game and possibly do 50 basis point cut in March. It could actually rock the bond world. The bonds sell off big. It sparks sell side activity, of course, to none other than the technology. And listen, this is about risk reward. I mean, I'm not going to sit here and try to handicap a binary news announcement. I'm not going to tell you that I have any clue where CPI is going to come out, and I'm not going to tell you I know where order flow and how order flow is going to play out. But what I am going to tell you here is that there's a limitation to the upside, and there's a dramatic, if you will, downside appreciation that could happen. And I think at this point you have to actually appreciate, that risk. So if you will, the upside, what do you have inside of the upside? I mean, we're trading roughly 45, 85. Again, to the upside, maybe about 20 S&P handles. Don't be surprised, though, for that knee-jerk reaction. We could move up 40 and pull back. Nevertheless, limited upside capacity, massive downside risk is going to be on the table. Nevertheless, between now and Friday's expiration, all right, this is like, just consult the options chain. Don't think, just consult the option chain. What is the market depicting risk to be for Thursday and Friday of this week? And the answer is we still have some raging volatility. There's still a $60 move being priced in, and yet we've already seen, again, a substantial move to the upside. One last aspect I want to leave you with, bonds almost feel poised to get smashed to the downside. You're looking at volatility. You're thinking to yourself, volatility has collapsed. Look at the volatility futures. First of all, if you are looking at the volatility futures, stop looking at the 7-day volatility futures. Okay, they're over, they're done with. You got to start looking at like 34-day volatility futures, 70-day volatility futures. I can tell you right now, they're down, but they're not down much. One other thing that nobody's catching here today, this is an unusual one. The VVIX, that's the volatility index, it's gone flat the last couple of days. In effect, there's actually people starting to hedge again at these particular levels. So the answer to that kind of question that looms is don't trust this rally. Okay, and don't trust it for a second. As we come into today's cash close, again, the Nasdaq flying up some 2%, but the Nasdaq, it still is lagging, again, still lagging versus the S&P 500. All right, and that has to do with, again, it's weakness inside of tech, and it's tech, though, that would be negatively impacted by a break lower inside of that bond product. Don't miss tomorrow morning CPI. Markets are going to rock on it. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.